U.S. indices prices rallied sharply last week after weaker-than-expected economic data from the United States saw a return of dovish sentiment on potential interest rate policy. Optimism returned to the markets, with investors bidding up the indices, with the USA 100 outperforming its peer indices. Prices of commodities saw a slight decline last week after a much-anticipated speech from the Hezbollah organization was milder than widely expected by market participants. Markets continue to remain volatile, although sentiment thus far has been relatively positive. For the remainder of the week, volatility continues to be expected, as some analysts suggest that the markets are not adequately pricing risk of further escalation in the Middle East. Economic data from last week has continued to fuel the recent upswing in the indices pricing, but we need to be cautious. Commodities prices sold off sharply as the wider market believes that the current conflict may remain contained, with crude oil and gold seeing the most volatility. Alibaba prices continue to trade near its IPO price, despite the company delivering strong earnings results in the previous quarter. Investors will be keeping a close eye on the next report set for publication on the 16th of November. Alibaba's Singles Day event remains a key performance factor for the company ahead of the upcoming earnings, and if there does turn out to be a strong sales performance, it could set the tone for the upcoming report and investor perception of the company. Apple prices saw a slight pullback before rebounding last week. Overall, the company delivered an earnings report that exceeded analyst expectations, although overall market sentiment was relatively negative at the time. However, with Black Friday and Cyber Monday coming up in the second half of November, Apple could see strong sales of its products over the period. This event could help improve the company's financial performance, as higher item sales could generate more revenue and improve net income. An improvement in financial performance could ultimately change investor perception of the company. Crude oil prices continue to decline, with sentiment toward the commodity turning negative in recent trading sessions. Generally, the decline has been attributed to potential containment of the Middle Eastern conflict, although many analysts are suggesting the market isn't adequately pricing in the risk of escalation. Furthermore, over the week, both Russia and Saudi Arabia reaffirmed their voluntary cuts until the end of 2023. OPEC's World Oil Outlook report also emphasized that the organization expects crude oil demand to continue rising incrementally until 2030. Gold prices continued to retreat as risk sentiment toward the instrument deteriorated slightly. With the US dollar rebounding in recent sessions, gold prices experienced continued downside pressure along with the other metals as a result. However, central bank gold buying continues to remain a key demand side driver for the commodity. Furthermore, geopolitical uncertainty and potential economic implications have been significant factors in gold price volatility. Wheat prices rebounded sharply as the commodity experienced some of the strongest volatility it has seen in weeks. Recent supply and demand reports issued by the U.S. Department of Agriculture demand factors have continued to be a key driving force for the commodity. The report has ultimately forecasted a slowing of wheat production, while ending stocks continue to fall. Investors will be keeping an eye out for the most recent report set to be published on November 9, 2023. The GBP/USD rose significantly, hitting its highest levels in 5 weeks. However, with a more dovish policy stance expected in the UK, the currency pair could see volatility with the interest rate gap between the Federal Reserve and Bank of England remaining. Furthermore, if a more dovish policy is pursued by the Bank of England, which is widely expected, the pound could experience weakness.